We all know that in most cases it requires a large sum of money to buy real estate or launch a business, and you might be one of the many aspiring business owners who are pressed for cash and have little saved up. By now you might be familiar with the term business credit, where banks or credit unions allow the casual investor to buy properties with no money in hand, and it will essentially open a gateway into the world of real estate investing. However, if your business is brand new, how can you convince a bank to lend to you? If you follow the steps in this video, I'll tell you exactly how to use business credit cards to buy real estate. But if you're new to the channel, make sure to subscribe and stay updated every time we drop a new video. Now, the trick is to establish business credit to gain credibility with lenders and secure finance as a trustworthy borrower. Lenders will check your personal credit reports and scores when you ask for financing for a variety of investment property loans. With good personal credit, you could be able to obtain better conditions and lower interest rates. But what is business credit? Unlike personal credit cards, business credit or line of credit are established using your company's LLC rather than your own personal finances. By creating your business credit, you can apply for loans and credit lines to use for business-related expenses like purchasing or renting real estate, buying office tools and equipment, investing in stocks, paying employees. Each business receives a business credit score which ranges from as low as 1 up to 100. It's more dangerous for you as an individual when you risk your name and reputation for an investment property. When you use business credit to buy real estate, your personal level of risk is reduced. This is because the lender will only look at the credit of your business instead of your consumer credit reports and scores, creating business credit for the first time. If you wish to create good business credit, apply for business loans and credit cards that don't demand a high credit score or a significant credit history. Possible options include a secured business loan that would require putting collateral on your business or personal property, business credit cards that are secured and require a deposit from you, but can be refunded to you after a certain number of on-time payments, online lending platforms whose standards for approval are not high, finance organizations that also require collateral. And because they have a high likelihood of acceptance, online lenders are popular among small business owners. Other options include going to small banks and finance companies, which also include non-bank lenders like mortgage lenders, equipment dealers, auto finance firms, and insurance companies. Why should you keep business and personal credit separate? Keeping separate business credit protects your assets and money from the blowback of your business. For example, your home and other assets won't be at risk of seizure if you declare bankruptcy or fall behind on company loans. It's also useful if your credit is bad because you can construct and build business credit to qualify for loans rather than relying just on your personal credit score. It is a quicker and more cost-effective choice, especially if you have a large amount of personal debt like school loans, medical expenses, or a mortgage to settle. What advantages come with having business credit? In addition to improving your chances of being accepted for business credit lines and loans, having good business credit can help you cut back on business loan interest rates, reduce company insurance costs, other goods or services from suppliers without having to pay in advance, earning rewards and cash back on your credit cards. You also don't have to wait more than 30 to 60 days to get the money you need to make your transaction when you use a credit card. If you make the effort to establish solid business credit, you can use it to obtain finance. If everything goes according to plan, you can use those funds to make wise investments and eventually turn a profit in your real estate investing business. If you keep watching, I'm going to specifically outline 2 possible ways that you could buy real estate using business credit. Number 1, credit cards. It may seem absurd, but the reality is that some real estate investors choose to pay for an entire property with a credit card. But remember that just because you can do something doesn't mean you necessarily should. Using a credit card, whether it be personal or business, to buy investment properties can be very risky. Number 2, business line of credit. Another way you can use your business credit to help your real estate business is to apply for a general business line of credit. A business line of credit is offered by both conventional banks and online lenders. These accounts resemble business credit cards in certain ways. You may use a business line of credit up to the credit limit, settle debts owed, and repeat the process as long as the account is active and in good standing. A business line of credit can be helpful when you need to make purchases that you can pay for with a simple credit card swipe. What is required for a business line of credit? Your company's income and business credit profile are frequently taken into account when determining your eligibility for a business line of credit. However, some lenders decide to check your credit instead, and they may want you to sign a personal guarantee. It's in your best interest as a business owner to maintain excellent consumer and commercial credit reports, regardless of how a lender likes to review applications. Doing this can help you position yourself for success. When it comes to business lines of credit, interest rates might vary greatly. But just like with personal credit cards, most business credit cards offer a 0% interest period for the first 12 to 16 months, depending on the bank. Do I need to have a good credit score? Your credit score and the financial data about your company will be taken into account when determining your credit limit for a business line of credit. The better your company's credit rating and financial performance, the better your chances. However, credit lines often have lower lending amounts than mortgages. Therefore, you will generally need to stick with properties with lower asking prices if you want to use a business line of credit to pay for an investment acquisition. Should I pay my mortgage using a business credit card? Most experts generally advise against treating a business line of credit as a 30-year mortgage if you choose to utilize one to finance a whole investment property. Instead, think of it as a short-term loan. When using a standard business line of credit, your lender will conduct an annual evaluation of the account. If at any time the lender considers that your risk has changed, it reserves the right to liquidate the account and convert the remaining sum into a term loan. What is the time frame for establishing business credit? It takes time to build business credit, especially if you're just getting started. The time depends on the type of financing you select and how effectively you manage your finances. For instance, you could seek a credit line after 6 to 12 months of timely vendor payments and relationship building after another 6 to 12 months of doing so. You can use your vendor as a reference to get a bank loan or company credit card. As a result, establishing credit for your company could take up to 2 years. As timely payments are taken into account when determining your business credit rating, it should be noted that paying off business loans too quickly can impede the growth of your business credit. Therefore, if you pay off a 12-month loan in 3 months, you will only have made 3 on-time payments instead of 12, unless you go on to obtain another loan. Over time, you accrue more points the more on-time payments you make. As a real estate investor, having solid company credit is a crucial advantage. You can use it as leverage to lower your borrowing costs and gain access to new options. Opening a business credit card and using it responsibly could aid in improving your business credit rating. If you want to be eligible for future business loans with favorable rates and terms, you must have strong business credit. You should always research successful investors to learn the best strategies to fund your real estate investment purchases if you are still unsure about your real estate adventure. None of this concept of business credit will be possible unless you understand the basics on purchasing a home or financing a rental property. And that's why we've created the perfect video that will allow you to buy your first property with no down payment at all. Click the video on the screen next, and I'll see you in the next one.